What's up, everybody? I am super excited for today's video. I've got my friend Donovan here with me from LoanX Mortgage. He's had so many amazing things happen in the last few years, just with being able to close out loans. You guys know that I'm in Michigan. He also closes out loans in other states as well. I'm going to make sure that I drop all of his information in the description box. But as of now, let's go ahead and chat about our jumbo mortgage. So Donovan, you want to say hey to everybody,
Beautiful.
Introduce yourself?
Hi guys, my name is Donovan Hayoo. I'm one of the Triple Crown bankers here with LoanX Mortgage. I've been doing this for about close to 2 years now, and I don't think I can do anything else, to be honest. Really helping people get them into their forever home essentially is something that really sits well with me. And I got the lovely Tiffany here to help me out with that, and very excited to jump on in and get as many people as possible to learn about the process in purchasing a home.
Awesome. So before I get into my questions, share what other states you can do mortgages in, because like I said, people will find you from everywhere, but whether they stay on the video or not, it's going to be if you can actually help them. So of course, I'm in Michigan. That's where I service. I have partners everywhere. We can get referrals, but where all do you service for loans?
So LoanX Mortgage, you can see it on our website, all the states that we're licensed in, but the main territories I like to stay around is Florida, California, Arizona, Texas, Georgia, and Michigan. But we are licensed in, I think, about 28 different states. So go on our website, see what states that we're licensed in, and if you have any questions, I'm sure we'll have the information for you guys to contact us.
That's perfect. So if you're in any of those areas, stick around as we're going to answer all the questions regarding the jumbo mortgage. So I wanted to focus on the jumbo today because obviously FHA conventional, we definitely can talk about that, but I feel like across the board, that's the mortgage that everyone knows. Here on my channel, I focus a little more on some of our higher end areas here in Michigan. So if you're getting that second home, if you're looking for, just that luxury, you want to get into that next space. That's why I kind of wanted to talk about the jumbo. So can you kind of tell us in a nutshell, what is the jumbo loan?
Most times people think about jumbo, like you've mentioned, is high luxury, right? Mm-hmm. A process that's going to take a little longer than just a traditional mortgage. Mm-hmm. A little more qualifications when it comes down to jumbo loans, like credit scores of 680, depending on if it's a little higher, that plays around with that loan to value, how much you're required to put down. Okay. Now, although there's a minimum of a 680 credit score, our company has a rapid rescore. So if you have any credit lower than a 680 and you're looking into these high areas of value, we can do a rapid rescore for the credit. No charge, no cost at you guys. That's just something for partnering with Tiffany, partnering with us, LoanX Mortgage. But mainly the best part about a jumbo loan is with the lenders that we've partnered with are wholesale. So quick processing times. Most jumbo loans require 2 appraisals. We get that knocked out within the first 7 days. Fast close times, 10 to 15 day closings. And the best part about it is the max jumbo loan you can go up to in the county here is about 3.5.
Great, okay.
And a lot of retail lenders, credit unions require a 20-25% down payment. Okay. With some wholesale lenders that we have, we only require 10%.
That's great. And so you said the max is about 3.5. At what point does the jumbo have to start? Because I know our conventional does at least go up to the 700s.
Yep.
So what is that starting point for the jumbo?
So that depends on how much you're going to put down as well, along with the FICO score. So it's an individual basis. Okay,
so of course you would have to call Donovan if you want to get more in depth about your situation. But again, I just wanted to give an overall spectrum of kind of what it looks like, because most of us only know FHA conventional. Even me, I've been in real estate for a long time, but until you get into it, you don't really know much about it. And I'm here all about educating my clients in preparation for that. So I have a question for you. And this one, it is, I would say it's industry based, but also kind of maybe your own personal opinion too, because I kind of think I have a personal opinion about it. Do you think that there's ever a bad time to buy high end when it comes to real estate?
In my opinion, before I started doing mortgages, we all hear about rates, we all hear about closing cost, and that kind of deteriorates us from buying. But now being in the industry and understanding how things work, we see the market fluctuating up and down, up and down. So I always tell people, if you're comfortable with the monthly payments and the out-of-pocket expense, the investment for your home, I say move forward with anything that you want to do.
Yeah.
Because if you buy high with a high interest rate, you wait 5 years, interest rate's lower. And by that time now, you've established equity in the house.
Yeah.
And that's what most people did in COVID. Because prior to COVID, people were just in that mortgage for a long time. And then when the rates dropped, some people actually lowered their monthly mortgage payment after pulling cash out.
Yeah.
So to answer the question, if you're happy with the monthly payment and the investment for the home, I say move forward with it.
Yeah, I'm literally the same way. I have a friend now who they're looking to buy, and he's like, I got pre-approved and it was great, and they're in the lower end. He's like, but the interest rate is so high, and I said, well, if you're waiting on that interest rate to go down, then you're going to see more competition. There's going to be more fights over the off. So that price that you think you're looking at a home, it's not the price because the buyers are going to drive it up anyway. So like you said, you get in something that works for you now, and then later on you just refi. So we kind of have the same mindset. So I just kind of wanted to see what other industry leaders are thinking, and that's everybody's question. Is it a bad time to buy? Is it a good time to buy? And like he was just saying, it's really like most real estate, it's always kind of based on you. There's never a bad time because there are people in the industry that are buying now, whether they're buying high and buying low, that are going to do well and that are doing well in the future, just like 2008. Right?
Exactly.
There are people who came in and they're so glad that they did, but then there were other people who were exiting. So I kind of feel the same way. So another question that I want to ask, because when you start talking about like higher end, and we have a lot more millennials now that are getting creative in business. They're making a lot more money. It's not just older people or people who've been in, business for 20, 30 years. There are people, we got TikTok stars and Instagram. Like these people are becoming millionaires now.
Exactly.
And so their income is not traditional. So maybe their loan process won't be as traditional. So what are maybe some other products that you guys have where the client isn't just a traditional, here's my W-2 or here's this.
Here's my
it's
pay
not,
stub.
it's not cookie cutter. Like you said, I know a lot of stuff you guys will have to talk to them one-on-one to see their picture, but if you could just kind of share, what are maybe some other products that we have for the non-traditional client?
I have a lot of investors coming to me and saying, hey, Donovan, we can't get traditional mortgages because we haven't showed our income in the last year or whatnot. They're just writing off a lot on taxes for self-employed people. Like I've mentioned, investors. You've mentioned a great point. People are becoming millionaires in about a month, 2 months, and how can we approve someone for that? But a lot of wholesale lenders, and here's the benefit working with a broker, is we're not tied to any one lender, right? If one lender can't do it, I'm going to find you 26, 27 different ones that will. Kind of like a tourist guide. You want sand, you want tropical, he finds you a location to go to. But there's investor loans that we have, Investor Flex. We have DSCR loans. Right now, that's coming up into the market. A lot of people are getting very familiar with it, but basically, it's just your income is qualified by the market rent schedule. So if you want a rental property, depending on how many of them you want, we can finance up to 20 in one transaction. They will get a rent schedule going, and they will use that as your income before you even have a tenant in there, which is very, very key because that offsets your debt to income. Now, the best part about that too is there's no prepayment penalties too. So with all our loans, no prepayment penalties. You become a millionaire in a month, pay off the house, right? But there's also bank statement loans, right? So they look at things like, hey, how much do you have in reserves? So it's based off of your purchase price, what the mortgage will be, and if you have 6 to 12 months of reserves in there, you're simply qualified. So a lot of room for adjustments and a lot of compensating factors too. Just depends, like Tiffany said, it all depends on individual basis.
Yeah, and I love that. And the main thing that I want to say to you guys, and I'm sure Donovan can agree, just don't assume. A lot of people will assume I'm not ready. Again, we think in the traditional, I've had to work somewhere for 2 years. I've got to have a W-2. If I didn't do this, if I didn't do that. Again, lenders, they're constant. They know the market. They know the industry. Again, they're seeing people rise in different ways financially. So of course they're making the adjustments behind the scenes. So let Donovan look at your picture. Let him look at your finances. Don't assume, oh, I don't have, tax returns for the last 2 years and I can't do it, I can't get approved. Like he just said, they have the products to answer the questions
Correct.
for your situation. So I just want to pin it here. Don't assume.
Exactly.
Let them look at your picture and tell you. And even if you're not ready now, if you want to talk about that, just kind of like your process. I love that, I think that was you that told me like there is no denial. It's just not a right now and what we have to do. So can you kind of talk about that, being willing to walk through the process with the client?
Right. I have a lot of my families that come to me and say, hey, we've already been denied by a credit union or our specific bank or lender. And I always tell these people, hey, there are times, you're in a market where maybe credit unions have higher margins. Maybe they have a little more strict guidelines that, they didn't really dive too into detail with. For example, you have 2 cars, right? And you had a banker at the credit union look at your debt to income ratio and saw 2 cars in your name and automatically said, oh, I'm sorry, your income's not enough. But if he asked you a simple question, hey, who's making a car payment on this loan? And if it's been 12 months, we can omit that from your debt to income ratio. So not a lot of times that people who are being denied by one lender can't get approved by another lender. So I always tell people, hey, sometimes you go with your credit union that you got a car loan, a credit card, personal loan with. You want someone that specializes only in mortgages.
Yeah, that's good.
Kind of like a family doctor, right? You wouldn't go to a family doctor if you broke your wrist. You'd go to a special surgeon for that because they know the details about that wrist.
That's good.
Same with a mortgage broker, especially for Loan X. We like to make sure that we submit people into underwriting prior to sending out a pre-approval.
Yeah.
That way there's no issues going into process moving forward. So like Tiffany said, try to clear out the hearsays and what one person said, because even a 2% different in debt to income or just income or assets can make a whole loan different that you can't base your friend's previous experience on. So
yes, and I've been doing this for a long time, and obviously there are, just like there's what they say in Detroit, for those of you who kind of know Detroit, there's a liquor store on every corner, or there's a church on every corner. I mean, now there's a lender. Every time
corner,
you scroll, every other person is a lender. Every other person is a realtor. So I could have, done this with anyone, but I wanted to do it with Donovan because we kind of carry the same value, where your process is so much more important, and we're not just going to look at it and say, oh, this is what I can't work with it. Some people are looking for easy. They want it to be picture perfect. If it's not picture perfect, we're still going to look at the picture and see how can we still make this work for you and your family and your end goal. So I love that you said that, like, don't make assumptions, and just because this is what one person's process was, is absolutely not going to be the same for you, and you want someone that's going to walk through the process with you. So my last question then, again, like myself, some of us have already purchased that first home. And so now we're like, I want to upgrade. I want to get into luxury. I might be a little afraid because I know the mortgage may double, but I know I want what I want. I work so hard. So I want to get to that next level. So if there is someone, again, let's just say you're talking to me, or, you're talking to a friend, and they're like, all right, Donovan, I'm doing good right now, but that next home, I want to go higher, I want to go bigger, I want to go better. Or somebody who's not ready, and let's say their first home. Again, it's amazing how many kids that I'm seeing that live with their parents and they're doing crypto, and again, they're just wealthy. So nowadays their first home may be a luxury home. We don't want to assume. Right. And so what would you say kind of the steps are? I haven't bought my first home yet, and my first home may be luxury, or I bought my first home and now I want to buy my second home, and it may be one of those different products that you talk about. What are some steps that we can take right now, whether it's working on our credit, paying down student loan debt? Like, what are some steps that you would say, hey, this is what I want you to do in preparation, so that if next year is your goal, you'll be ready?
Yeah,
call you first. That's step number one. And then what are some things that we can start doing?
So you ask a very, very, very important question that sometimes people skip.
Yeah.
And then start looking for houses already. And then finally start putting offers on houses, then going to a lender and saying, hey, what is my monthly payment going to look like? Times like those, you can honestly lose an earnest money deposit, depending on how long the time frame is to get financing or whatnot. But the most important thing I say, is get that legitimate pre-approval done. Before paying off any debts, before opening up any debts, talk to a mortgage broker. LoanX Mortgage.
Of course.
Because it's very important. A lot of people think that paying off debts is going to help them get into a home. Realistically, people don't know that there's a lot of debts that don't need to be paid off because it has such a minimum monthly obligations to where it has no impact to the overall qualifying factors of a approval. That's the most important thing that I see a lot of people saying, oh, I'm trying to pay down debts, right? The only way that any debt can have any impact to a loan approval is if it's completely paid off, not paying down. So a lot of people get that mixed up. But the most important thing is, one, don't open up any new debts before purchasing a home. One, any inquiries made on your credit report for any loan will bring down the score. Number two, adding any new debts or any credits will also bring down your buying power. So if you foresee buying a home in the future, consulting with a realtor, consulting with a broker is honestly the most important thing that you can do, and it'll save you a lot of money too.
Yeah. So you just said two really kind of like big terms for people to understand. So you have the debt, which is what most of us think about, and paying it down. And obviously there's a debt to income ratio, which again, you would be able to share that on a more one-to-one level. And then there's the buying power, which is what most of us want. So we worry more about debt, but the buying power is what we want, which is what we would be approved for, right?
Correct.
That's that number that you would approve us for.
So essentially how it works is what you make on a monthly basis for your income divided by the monthly obligations, whether you have a car loan for $200, you have a jet ski loan for $100, it's divided by that. Now, wherever that ratio comes in, conventional, traditional has 46%. You can't go higher. Now, for people that are more risky, that have more debt, FHA allows to sometimes 57%. Now, how do you understand what your buying power is? Well, what's a new loan? A mortgage. The monthly payment now will be divided by your income. So that's the most important thing. A lot of people think, oh, I have a $60,000 car. Well, if it's $150 a month, it's much different than having a $400 monthly payment on a car.
Right. I love that. I love that. You shared so many just amazing nuggets. And I promise this is my last question. So even if someone wasn't ready to purchase until 2024 and they were still going to work with me and work with you, you would still recommend that they go ahead and give you a call. You look at the picture so that way you can let them know what to be doing to prepare for 2024. So don't assume and just start trying to pay stuff down and all that. Let you look at the picture. And you'll say, hey, by February of 2024, this is what needs to be done.
And even if you're approved now, if you call me and I say, hey, you're approved, and you tell me I'm looking at buying in 6 months, we're going to come up with a solution to when you're buying in 6 months. You can actually buy for much cheaper. You can actually increase your credit score. We can look at ways to better the loan in 6 months. Rather than, hey, you're just approved now for $200,000. No, we're going to try to figure out how you can get approved for $300,000. That way you have more buying power.
Yeah, I love that, y'all. This is why I had to do this with Donovan, because I'm going to go ahead and just put myself out there. If I would have done this, I would have actually told you guys, start paying down your debt, start preparing, but that's why you have to get connected to the expert. I sell houses. I can find you a house. I can negotiate your contract. I don't do loans, but Donovan does. And so he said, give a call today. If you're not ready, if it's going to be in 6 months, you can still call him today to start preparing. So Donovan, I appreciate you so much for your time. Is there any last minute things that you want to say, want to encourage anyone? You know, again, the market is tricky, right? It's really tricky right now. We're doing everything we can to stay on top of things. And there are clients who are like, is it the right time? Is it the bad time? You know, clients are going just as crazy as we kind of are. So is there any last minute things you'd like to say to everyone?
Just important, research who you're speaking to. I would say before I started doing mortgages, you know, I would have done the same thing. I would have been, I got to pay down this debt. Just really understand that the market fluctuates super, super fast, right? One week we can be going into rates at a 5%. The following day it can be at an 8%. So if rates are going up and down, guidelines are changing.
Mm-hmm.
Always research who you're speaking to, because it's very important to understand that you're working with a reputable person.
Yeah.
One that's gonna not just approve you, but also look out for you as well.
Yes.
So just research, research. And if you have any questions in buying a home or
Yeah.
getting approved, sounds like we know who to go to.
Yeah, absolutely. I love that because he's so right. I know clients in the past that were approved and it didn't close because that person didn't look out for the person.
Mm-hmm.
They handed out a pre-approval because that was their job. They didn't go that extra mile for their client. So everything that he has said, I second that. And so again, all of Donovan's information is going to be in my description. You guys will see me more working with Donovan. Again, we are really here for you. So whether it's your first home, your second home, your third home, investment properties, commercial properties, we would love the opportunity to be able to work with you. And as Donovan said, they're in multiple states. So if you're not in Michigan and you still want to be pre-approved and you want someone reputable, someone that you can trust, and then someone that I recommend to you guys, that's why you're here on my channel, I say give Donovan a call. So thank you all so much for tuning in, and we'll see you in the next video.
Thank you guys.